What's up, my people? It's Ola Tony here. I'm back again with another brand strategy. Guys, this strategy is one of the perfect strategy and the best I've ever created. It has a 95% win rate, and I call it my NBA strategy, which means never break win strategy. Guys, this is the right strategy. You need to grow your account, or you want to make that quick buck, or you need money to just do anything. Everybody needs money. This strategy is the killer, guys. You understand? It's so super. I want you guys to stay tuned to find out how. Let's go. Guys, to begin with this, we need to know some certain things. First, we need to know what trend the market is saying. Maybe it's an uptrend, downtrend, or ranging market. We need to figure that out first. And when we are figuring it out, we are going to figure that out on the 1 hour time frame. Then after we figure out the trend and where the market is going, market structure, all of that, we then proceed to the 5 minutes to execute our trade. First, let's see what market structure is telling us here. What can I see here? Let's zoom out. Let's see. Okay, let's start from like here. We can see this is a higher low. This high was broken. It signifies an uptrend. Create another higher. This low wasn't broken. Higher low, higher low. High was broken. What is that telling us? We are on an uptrend. This signifies the break of structure. Those of you that understand ICT smart money, you understand what I'm trying to say. The high was broken here. High was broken here. Like that. The high was being broken. What does that signify? That signifies an uptrend. What do we do? So for us to have a better win rate, we need to identify the zones, because it's in a channel, it's in an uptrend. We need our trend line to know the channel the market is going to, so that we can easily spot when we leave the trend. You understand what I'm saying? Maybe we can easily spot when there's a breakout, or when the market is not currently in that range again. We take our trend line tools and we draw them. So it's an uptrend, and we draw them. As I didn't randomly pick any chart, this is the current GBP/USD on the 1 hour time frame. This is what the market is telling us currently right now. Sorry. This is what the market is telling us right now. This is it, guys. This is it. After we've identified the trend, what is the next thing for us to do? The next thing for us to do right now is to move to the 5 minutes to take our potential entries. You understand? I'm on the 5 minutes right now. I'm on the 5 minute time frame. Before we can get into this trade, we need 3 moving averages. That's only what we are going to need. We need the 50, we need the 20, and the 200. Let me add them out, and I'll explain to you how to use them. Go to our indicators, and we click on moving average. We add the 200 moving average. I'd use make sure the method is exponential style. I'm using yellow. You understand? Depends on what color you want to use. Then we go again, add another one. We add let's add 20 now. 20. Let's use blue. Let's use blue. So 20. Then we're left with one more. We need 50. Let's add the moving average again. We need 50. Let's make this one red. All are exponential moving averages. You understand? That's it. We've done adding them. First, we've known the trend of the market. We've understand market structure from the 1 hour time frame. What did we see? We saw that the market is trending upward. That means we are in a uptrend. And guys, let me tell you guys this secret. If you want to maximize this strategy, I would advise you strictly just only get into the trade when the higher time frame market structure, which is the 1 hour, is in a trending market. Don't enter when it's in a ranging market. Don't enter, because you won't have the much win rate you will get, because this strategy has a 95% win rate, guys. This is legit. I want you guys to go try this out and come back and tell me with the results. You understand? We've known that in the 1 hour the market is trending upward. We know the majority of the markets will be filled with buys. What are we going to do now? We are going to only enter the trades where we can spot a buy, and we are going to enter those trades in between our trend line, the trend line we drew on the 1 hour. We're not going to enter when the market leaves the trend line, because that might signify a breakout. We don't know, maybe it's a false breakout or a real breakout. But to avoid any of those barriers, we just stay out of the market, because guys, that's how you can achieve a 95% win rate. You understand? The market is very tricky, guys. Let's try it out. Now, to get into this trade, what you need to do is that, number one, the 200 moving average is the yellow one. You can see the 200 is the yellow one. This is our 200 moving average. Then the red 50 moving average, and the blue is what? The 20 moving average. So the red is the 50 moving average, and the blue is the 20 moving average. The only way we can get the trade is when we see that the blue, let me zoom it for you guys, when we see that the blue and the red crosses themselves upward, the blue will be above. That's when we can enter the trade, and those two moving average must be below the 200 moving average. You understand? You guys know what I'm saying? Now in this case, we can't get into this trade. Crossing must happen above 200 moving average. You see the crossing, I think the crossing happened between this. I won't say we can take this, but there's another way we can take a trade. The other way we can take a trade is when the market comes back to touch the red moving average. What is our red moving average? The 50 moving average. In this case, I won't advise us to enter. So wait. We wait for the market to retest. It's time, because we can't buy here, because this is a premium zone. We need a discount zone for us to buy. So we wait for that, for the market to touch the red. And if you notice, you can see when it touched the red, what happened? It spiked up. So when it just touches the red, which is the 50, what do? Instantly you enter for a 1 to 2. It touched it. Where did it touched it? Here. So you enter immediately for a 1 to 2. I think this gave us more than 1 to 3. You can see it came out in profit, guys. This gave us more than 1 to 2. But I advise you guys to achieve a 95% win rate, just go for the 1 to 2. Don't be greedy. Don't be greedy. And for your stop loss, in this case, where is it? And for your stop loss, in this case, your stop loss will be below this candle or below that 50 moving average. You understand, guys? This is a killer, guys. You don't worry. You guys will see. You guys will see what I'm saying. That one came. Let's look for another opportunity. Now it crossed it here. Now I'm going to enter. We'll enter here. You see, you must be very careful, guys. You must look. You can see the two moving average, the 50 and the 20. They are above the 200, and it crossed it. Oh, this is a perfect entry. What are we going to do? We enter here. Put our stop loss here. You can put your stop loss below the 200, or you can put your stop loss below the 50. Most especially, remember 1 to 2, guys. We enter the trade. This gives us more than the 1 to 2 we are looking for. But to be on the safer side and to achieve a 95% win rate, just go for a 1 to 2. Don't be greedy, guys. Don't be greedy. Don't be greedy. Let's look for more opportunities. Let's look for more opportunities. You see, we have another one. The market crossed it here. What can we see? We have an opportunity here. It crossed it here. What do? You get in here, put your stop loss here. What do we have? The market went to the upside. Guys, this strategy is basically simple. What we are doing is that we are just entering from the retest. Again, because we already know from the higher time frame, which is the bigger picture, we already know that this is an uptrend. So what we are doing is that we are catching those small movements that sums up to become the uptrend. You understand? This moving average, especially the 50, is very, very good, and it's very accurate for us to know when the prices comes back. The market doesn't move in one direction. It goes up, comes down, goes up, comes down, goes up, comes down. You get the scope. That's just how it works. So we are just tapping them from the impulsive move, the retest and all of that. I think we have another one here. Remember, guys, if it touches the 20, it's not advisable to get in. It must come back to touch the 50, or better still, when the 50 and the 20 crosses themselves above the 200 moving average, that is only when you can have an entry. Touches this here, no. You see, it still came back. It wasn't strong. Then it came back to retest the 50. What happened? The price spiked up. You get in here, take your 1 to 2 profits. You can see, guys, this is so interesting. So interesting. Let's look for more opportunities. You see here, price came back to this zone. You enter, put your stop loss. 1 to 2 came. This is up to 1 to 2. If you get in your trade here, you put your stop loss here. I think this one should be up to 1 to 2. I don't know how sure is this, but let's say it might not be. Let's just assume we lost the trade. But we have 3 wins if we are counting. Let's see. Now, guys, this thing is very easy, guys. This is not like a magic indicator. This is just following basic market structure. As you can see from this, the reason why it didn't come, this one didn't come, is because it's showing us that the market is going back down. It wants to correct itself. But remember, we already know that this is an uptrend, but market can't just be going up. It needs to come back and make some correction. So the market is going back to make the correction. So what will you do as a smart and intelligent trader? You wait for the retest. You wait for the impulsive next move to the upside. You get what I'm saying? I see dropping. You can't enter here. Let me break it so that we can see the bigger picture. This is where we are. I think let's assume we lost this. It went down. We can't enter. It's below. We can't enter anything here. Below the 200, we went down. It broke our trend line. You can see. Then it went up. This is a fake out, guys. When you see the market like this, like broke it and came back, that's just a fake out. That one is just there to just induce, to take liquidity from the breakout traders. You understand what I'm saying? If you guys understand how the market works, all these things will be a lot much easier and better for everyone to understand that this is just a probability game, and the more knowledge you have in the market, the more profitable you can be. Let's see, do we have any opportunity here? The market spiked up. You can see we had the retest here, guys. You can see you enter. Let's say you entered here, or I don't know where you could enter. Put your stop loss here. What do you say? You take your 1 to 2 profits. You see, let's say, okay, you could enter here again, profits. You can see you can enter here again, here, profits. Guys, you can see how this is very effective. This one didn't bounce off, it broke it. You can't enter. You can only enter when the market reacted from that zone. When the market, okay, let me you can only enter when the market reacted from that zone. Let me show you guys something. If you can notice this once, the market touches the 50 and it went back up. Not it breaking it. When it breaks it, it's not valid. You understand? When it breaks, it's not valid. Like something here, it broke it, it's not valid. Understand? It's just telling us this might be a readjustment. You understand? So the market can't move in one direction, so the market needs to adjust. This is just like the readjustment structure. You get, we don't know, maybe it's going to spike down or anything, so we can't enter here. But we already know in the higher overall time frame that this is an uptrend. You get the scope. We can't enter here. No, we can't enter because it broke it. We look for opportunities, you see, and bear in mind we can take any trade from here if it fulfills our condition, because the 200 moving average, you understand, is below. We are good to go. Let's see. I think we had a bounce off here. We had a bounce off here, right? But it didn't work out. We got stocked out. All right, we take the loss, but I think we've had close to, if I'm not counting, 9 to 8 wins, and this is just the second loss. You can see you're doing 1 to 2. Do the math. You can do the math and see how profitable you guys will have been. Where are we? We lost this, then this market retested from here. We enter, put our stop loss here or here, profit. You see, we've made that back immediately, guys. This is super interesting. You can use this strategy to grow any account, prop firm, a small account, anything, guys. This is the best you can find. This is real, guys. This is I'm on the GBP USD, the latest chart. You can see this is 11th of July. I didn't maybe pick any chart randomly or anything. You can just go try it out and see and tell me the results. Understand, guys? That is that. Let's just take more. Let's just take more so you can see retested profits, guys. This is interesting. You can see the market is coming down now. It has crossed the 2-minute average, the 50 and the 20 has crossed themselves downward. They broke into the 200, which signifies a readjustment. We are expecting a spike up. We just have to be patient, then wait for a retest or a crossing over. Then where did the retest happened? I think the retest happened here. In this case, it broke it and it went back up. You guys just need to be patient and understand this thing. You can see a retest happened here. Market came back up. When it got here, this, you just need to be observant, guys. The 50 moving average serve as a resistance for us. So you can know when you see the price reacting for that area, just know, get in and put your stop loss below the 50 moving average and target your 1 to 2 and get out of the market. Simple and nice. What do we do here? We get to the market, we made our 1 to 2. Super nice and super easy. That's it, guys. Market broke here, came back off. You can see came back, reacted on the 20. No, we can't enter this. We wait. You see, this is not an entry because the market broke it, and you need to see, if you notice, it broke it with a strong bullish candle, bearish candle, and strong. You see, it broke it with a strong bearish candle. This is not a retest or reaction. Broke it. It's not valid. Broke it. It's not valid. Broke it. It's not valid. You see, so this is not valid. Let's look for more opportunities. Let's look for more. Guys, don't be tempted. Don't enter when it touches the 20. No, just stick to the rules. If you want to last, if you want to be profitable, if you want to really make a living from this game, just stick to the rules and watch yourself swimming in profit. What will happen? Okay, we had a cross here. You can see opportunity always come, but the market will always test you to see maybe you can still stick to your rules or you can go out of your rules. When you go out of your rules, man, nigga, you won't last, bro. You won't last. You can see a crossing happen here. Beautiful. We can get in here, then put our stop loss below the 50, 1 to 2, or you can wait for a retest on the 50, 1 to 2. Smooth and easy, guys. That's just it. So we left the zone, we can trade again, then we wait again to see where the market is heading to. So guys, always be very cautious of the higher time frame. You understand? Always very cautious of the trend that is going on a higher time frame, because that's the key in what will make us keep being profitable. Because if we are sure of the higher time frame trend, yes, a nice well guarantee that we will always win any trade we enter. That's it, guys. A wrap for me. Guys, smash the like button, subscribe, share this video, and put this strategy to test. This is my never broke again strategy, guys. This strategy is the hottest thing you can find on YouTube. Put it to test and see how profitable it will become, and come back and share me your results. The wrap for me. Bye for now, guys.